Hey guys, welcome back. Hope you had a good Thursday, June 30th, last day of June. Tomorrow is July, it's Friday. SPY, kind of making a big range today of sorts. We'll look at that. I opened up a position. Here's a little head and shoulders. Yeah. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter at Happy Money YT and a Discord server. You can jump on either of those. Follow us on there. Get on the Discord. Share your thoughts. Get harassed. SPY, yeah, SPY kind of made this head and shoulders here. Head, shoulder, shoulder. This is on the hourly time frame. So, and SPY has been pretty scared coming into Fridays for the last, I don't know, a couple months really, since we've been in this bear market. Especially into a weekend holiday, I'm kind of thinking it'll come down. And then Monday's closed because of 4th of July. I guess historically, the week of 4th of July is pretty good in the stock market, but all that stuff's kind of thrown out. We're breaking all sorts of historical records. So head and shoulders a little bit, but what I'm starting to see, you can see it here even on the daily, is this divergence. You can see it easier on the daily with the MACD. This orange line is the MACD. See how this is higher right here? This low on this line is higher than this low and this low. These lows are lower on those troughs than this one. This low is lower. So typically this would mean the price action went up, but it's diverging because this price action went down. So this low is lower than this low, where this low was lower than this low. This is going down, this is going up. That is a sign of a reversal. And you can see it even on the weekly candles on the RSI down here, relative strength index. It's pretty subtle on here, but actually this is higher, this RSI, than this one. This one's 30.75, this one's 30.86. So very subtle, but there is a divergence even on the weekly. And the fact that it's a bigger, longer ranged divergence would indicate that the reversal move will be longer, because you're seeing it on the weekly candles, so it'll play out on a weekly type time frame. Or even on daily. So I think in the shorter term, there's probably a little more downside, a little more chop just from head and shoulders. Maybe tomorrow, maybe some into the next holiday week. But this divergence, I don't think will get broken. For this to get broken, well, it can't actually, not on the weekly. This is done. So, because this next week shot it up and that solidified that as a bottom. So I'm thinking SPY might have a pretty big bear market rally coming over the next couple weeks, month, maybe 2 months even. Probably at least that gap fill to 400 and maybe even much more, maybe even up to like the 50 moving average up there. Right now, 50 moving average is on 400 on the daily. On the weekly, it's up at 434, but by the time it gets there, it might be in this range. I'm seeing resistance back here at 423. So maybe a bear market rally on SPY, and over the next, I don't know, by this time next month maybe will be the peak of that. So yeah, we'll see how that develops. I do have short positions on SPY right now, or SPX, for tomorrow, and that's it. Actually expires tomorrow. So going long on it, if I start to see a bear market rally, this is where GME comes into play. GME has basically just on the bear market rallies has just leveraged itself and done much bigger moves than the SPY, except for this last time. And that is the concern, because now we've seen that it has these bear market rallies that are massive, but then this last time it just didn't. And so one of the differences this could be more just, you say these different terms, this could be more of just like a dead cat bounce than an actual bear market rally where momentum is actually shifted. This could be an overreaction more, because this was such an aggressive 4 days. Look at these gaps. This is insane, these gaps between these candles. So since it was such an aggressive move to the downside so quickly, this could have been more just, that's more of like a dead cat bounce, or kind of a reaction to this overreaction. Whereas this was a little bit more of a bear market rally where it kind of found a floor, stabilized, and then ripped. Same with back here, found this floor in this range, and then had this bear market rally. Same with kind of right here. So, well, this was maybe kind of an overreaction bounce too, because that was pretty bad. But not like this. So these were huge gaps down we had back here at the beginning of this month. So if we do get a bigger bear market rally, I'm still thinking GME will have that big rally also with it, just because of that's what we've seen. And Volkswagen squeeze was happening on a bear market rally just after basically the biggest part of the crash in 2008. So maybe we're going to see a big crash first. I'm not sure, but that divergence is definitely there. And so I do see a bigger bear market rally than we've had so far, because we haven't had a divergence on the weekly yet since we've been in this bear market. So the biggest one we've had so far was this 413 of a low to 460, which is pretty epic. Right now we're at 362 of a low, so that 400 would be pretty epic, but I think it might be bigger than that, just because I think it'll last over a longer time frame, just because of how spread out the divergence is. So during that, that might be GME's time to really make a big move. And yeah, and if that happens during next month, next OPEX SLD period, that could line up with when I think it could be happening on here, starting maybe mid-month OPEX time. That's the 17th, I think. So that would be SLD on that, I think is 14th. I don't know. Anyways, yeah, GME looks like it's probably headed down. It's held up pretty nice. It's not really decided which way to go, in my opinion. Coherently, it's kind of just in this range. It's a large range. It's like 117 to 145. Today we're kind of at the bottom at 122. Most Fridays they have brought GME down. They've kind of dumped it into Fridays, so probably a little lower into Friday. And then I'm expecting it to kind of keep coming down into next week. We'll have to see what the overall market's doing. If it does break that 117, kind of this support down here, it'll probably kind of keep coming then, because it'll be trading out of that range. And I don't know, I think we could see 100 again, maybe even back to the double digits. If it doesn't, if it kind of just wicks down there, it might even set up a divergence here. I was actually looking at today, was maybe setting up a divergence, but not anymore. It's too low. So no divergences yet. No signs that going to the upside. Actually, let's see. Yeah, it is setting up a divergence, but it hasn't played out yet. Basically, if this price comes lower than here now, if this one of these daily candles comes lower than 114, then it will be broken. But if GME kind of stays up above that and then starts to go up, this will have been the low compared to this low, and then that'll be the divergence there, because this will be a lower low, but this will be a higher low than here and here, here and there. Got it? This goes up, this goes down. So yeah, with that, we could trade in this range, could rip. It's just kind of, it's not a good very directional trade at this point. But there is signs that it could set up an RSI divergence, which would mean a rally, and that might line up with the SPY's RSI divergence and MACD divergence. Or if it breaks down this low, and it might tomorrow, then I'm thinking it'll probably kind of keep trending down for at least a week, maybe two. And then we'll be at a lower low for SLD or whatever, or end of month. Maybe have another cycle. So, and that would play out with, if we do break another low, that would play out with what was happening back here. So kind of where we're in this range right here. And we're just going to break that low. And then this was back when it was making a double, kind of a double bottom, which we might still make. We made one here, just much more stretched out with this, with a lower low on the second time. But we had a divergence there also on the RSI, signifying that run that we had there. So yeah, kind of just in this no man's land for now. Seeing that divergence on SPY though, on the weekly, is, to me, seems pretty big. Seems like that could indicate a big move coming up to the upside. And I think a move that big, I think GME would probably follow suit. Because the bigger bear market rallies had, GME is ripped. And it's maybe coincidence because it's just been going on with its own cycles and obligations, but maybe not all of it's been a coincidence. I don't know. Because this was, I think this was early. This March one. I don't think we're expecting it that early. At least I wasn't. Maybe I wasn't early. Oh, this one. I don't know. It seems like they're happening faster. I think this one was early. But this wasn't a full one. So this is just a bigger range. That's the thing. This is like right here. This wasn't really one, but this was kind of an interim between the two. Here and here. And that's maybe what this is. But it's just kind of stretched out. At any rate, bear market rally. I do see GME probably ripping up with it. We're also kind of right in this, right around this 50 moving average. And if you look at GME above 50 moving average, look, just grind below it here. Whenever it's been above it, it's pretty much just ripped. And this is one of the only times it's kind of just hung out right above it and not made its move. So if it drops below it, we could be below it for a bit. If it stays above it, it's I think prime for a move to the upside at any point. See here, crossed over to the upside. Here, it kind of grinded right below it, across the upside. Once it crossed below it, it kept coming down. Again here, crossed 50 on the upside. A little false breakout there, but not a real big move like back there. And then this whole time was above it. So yeah, that 50 moving average is trading right in the middle there. So not a clear direction yet, but it's gonna be exciting, I think, either way the next month or two. So we've got covered calls, we've got long calls, we've got cash secured puts, got it all. What do we do today? So I moved over those shares to the Theta account, so I'll be farming with more money. Because farming money, you grow money. Burning money, sometimes it makes a cool fire and goes up really quick and you make quick gains, but most time it just burns up and turns into ash and no cool spectacle. SPY, SPX, I did a SPY call this morning, and then an SPX call credit spread. So SPY opened up really bad, and then kind of just kept selling off. Way oversold. Saw this big green engulfing candle. Went long here with a 375 call. Put it in Discord, and then I think I dumped it like right here. It was like 40%, given there was a lot more move to go, but I wasn't gonna mess around with it. It was getting up to that resistance, and I was good with that. I think it ended up doing like 200%, somewhere up here. Oh, having a little bounce here. We got about 30 minutes to close. I did open up a call credit spread on SPX for tomorrow. Just seeing that head and shoulders, I'm thinking it's probably going to come down, and how Fridays have been bearish lately. So that's a 3795, 3800, up a little bit. The spreads on SPX, of course, are nice compared to GME. I also opened up a GME call credit spread. I've got the one expiring tomorrow, and that's a 123, 124. That's pretty close to money now. I mean, GME could close above that tomorrow. Hard to know at this point, but I'll probably roll that if it does expire in the money, or if it looks like it's going to. And then opened up one for next week, this 121, 124 call credit spread, just anticipating that GME will kind of keep coming down and break support. But it's not a super clear direction at this point, like I said. Here's a Theta account I moved some money over into. So tomorrow we've got a 124 covered call expiring, which that might be out of the money tomorrow. We'll see. And let's see, that was 424 in cash for that premium. 128 cash secured put, most likely going to be in the money tomorrow, so I'll have to roll that down. I'll just roll it as far down as I can and still receive a credit for next week, since I'm slightly more bearish on GME right now than bullish. Also this 110 covered call, which I will most likely be rolling up into next week and receiving as much credit as I can. Or no, I'm sorry, that's for next Friday. So that one actually might expire out of the money by next Friday. And our margin, cash secured puts, margin secured puts, 122s. So we're right on the edge there. We'll see if GME closes above 122 by tomorrow. It's at 122 right now. Then those will expire out of the money. I won't make the mistake though of having a minimum order. I'm gonna put an order out for 2 cents instead of 1 cent, because GME closed just out of the money on my ones the other day, and and then in the last like 100th of a second they shot it down like $3 or something, and so then they're in the money and I got exercised or assigned or whatever. So yep, that happens. No other plays were made today. Birds CEO, I think, stepped down. CFO, they did some rearranging on their C-suite. I guess BCG has kind of infiltrated them also. It's unfortunate. Hopefully Ryan Cohen can do something. Save me, Ryan Cohen. You're my only hope. That's what I got, guys. We'll see you tomorrow. See you on Discord. Peace out.